McDonald's shares trading higher this morning after quarterly results. You can see that stock right now up by about 2%. Joining us right now is one of the analysts who will be on the call a little later this morning, Sara, Senatore, who is Bank of America Securities senior restaurants analyst. Sara, the loss in terms of the sales decline, it's not a loss, but a sales decline was the biggest in about 5 years. But there's a lot here that the street likes. What surprised you to the upside this morning?
Well, I think to your point, the focus that most of the street has is on same-store sales growth. So revenue can move around depending on currencies, depending on the portfolio, how much is licensed versus company operated. But so what you're really looking for is a measure of the health of the system. And there we've seen international strength. Perhaps, given what we've heard from some of the other international companies more recently, perhaps not as surprising. But nevertheless, this is the first quarter in some time where McDonald's has actually beaten same-store sales expectations for its licensed market, which is where the Middle East is reported.
The U.S. comp store sales, though, were a little weaker than had been anticipated. I think traffic was good. Maybe sales were down. Is that discounting to try and get people back into the stores?
Yeah, that's exactly right. So the U.S. is still the biggest single market for McDonald's, about 40%, the operating profit. And that is a place where we've had some softness. To your point, traffic was positive, which is an indication of, yes, to some extent, discounting. We know that the $5 meal deal that they have been running for a couple quarters now has an impact on same-store sales through a lower check. And as they've launched this McValue menu, that's likely having, amplifying that impact where, either people are trading down or new people are coming in, but their average spend is lower.
I mean, I get it for them to continue that sale, particularly as they were dealing with the fallout from the E. coli situation with the slivered onions back in October. I've seen criticism from some analysts about that strategy. What do you think?
Well, I think, to your point, I don't think they have a choice, right? So,
right.
They can either choose to not have the value, in which case they won't get the transaction growth, or they can offer the value, which is what consumers want. I think, one of the things that we've observed over a couple of years is that McDonald's, it's been a largely check-driven same-store sales number, and they've taken a lot of price over time. Now that inflation has come down sharply, the industry as a whole is just not taking prices up as much, and certainly, McDonald's is a leader there. What I would say about, the transaction growth is we know that some of these lower price points are particularly attractive to some of the lower income consumers that have been under more pressure, because of higher inflation or various reasons. And so if McDonald's wants to be a value to all of its customers, and frankly, if you have, as many stores, 14,000 stores in the U.S. as McDonald's does, you do need to have broad appeal. And that requires, price points and value that are attractive to everyone. Look, what we've said is that this is going to be a reset year for their same-store sales in the U.S. You're going to have check pressure, and then you hope to grow from here.
We've got to run, but do you buy the stock here just below $300?
We have a neutral rating on the stock. This is a very good company, but again, we're going to continue to see check pressure as they reset their value proposition.